So hi everybody, nice to see you all with us today. Our webinar today is brought to you by BoardPro in association with Vigilant Pay and Strategy. Our discussion topic today is preventing fraud, a board's duty of care. My name's Sean McDonald, I'm from BoardPro, and I'll be your moderator for the next 45 minutes. First, thanks for attending today. We really appreciate the effort you've made to be here. Our webinars are short and sharp, full of great content to invoke conversation and seed great ideas. And we sometimes run out of time to answer everybody's questions or deep dive into a topic, but we'll always follow up with great questions with an email, so don't hold back on that front. During our session, if you have any questions, which we hope you do, please use the Q&A button at the bottom of the screen, and we'll be answering these during our session and try to get through as many of these as we have time for. And finally, if you stay through to the end, which we hope you do, and as is customary for our webinars, we have a special treat for you by answering our 1-minute survey. At the end of the webinar, you'll go into the draw to win a really beautiful gift hamper from our friends at Taken Care Of, worth over $400. Now, for a little bit about BoardPro, we're a board software provider that serve around 17,000 users around the globe. We enable organisations to run their board and committee meetings more effectively with clever software, with less time, and deliver far more impact and value for their organisation. And as much as we're a board software provider, part of our wider mission is to make the fundamentals of governance free and easy to implement for all organisations, especially those ones with resource constraints. So let me introduce our host and panelists for today's webinar, starting with Sam George. Sam is a tech entrepreneur. After experiencing fraud firsthand and discovering how exposed businesses are to payment fraud, he used his tech skills to develop solutions to combat the growing threat, of fraud for businesses today. Vigilant Pay is used by a range of New Zealand organisations to capture payment errors and protect themselves against fraud. Sam refers to his company as digital crime fighters doing their bit to take on the world and make it a better place. Welcome to you, Sam.
Yes, thanks. Thanks for having me.
Nigel Scott has a successful executive career in banking and wealth management before becoming a professional director. Nigel has a strong interest in growing privately owned New Zealand businesses and a director and shareholder in a range of private companies. Nigel firmly believes that best practice governance is a critical element in any business, no matter the size or the sector. Welcome to you, Nigel.
Thanks, Sean.
And David Greenslade has been providing financial advice to New Zealanders for over 30 years now, plus via Strategy, and has been providing compliance and regulatory training courses to owners and advisors of financial services businesses for over 20 years. The Strategy Group provides governance and compliance courses and consulting to over 1,000 companies in the financial services, real estate, accounting, and legal professions. Welcome to you, David.
Thanks, Sean.
And finally, Bruce Hurt is CEO and co-founder of BoardPro. Brett's a serial entrepreneur, having built several high-growth businesses over the last 20 years. Brett brings tenacity, a strategic mindset, strong generalist business skills, and enduring curiosity to the table. Welcome to you, Brett.
Thank you, and welcome, everyone.
So I thought I'd hand over at this point to both Sam and David just to give a little bit of an overview of their organisation. So starting with you first, Sam.
Sure, thanks, Sean. So Vigilance Limited is a company founded by myself after experiencing fraud firsthand, as Sean alluded to before. And after getting over the initial shock and frankly being pretty pissed off that we went through that experience, looked at the problem and found that all businesses are actually really exposed to fraud. And I'm talking around payment fraud, the money leaving the company. So I looked at how to solve the problem. I was in the tech industry, and fundamentally it was a tech issue, disparate systems not communicating. And so we set about building a platform that is now well on the market, called Vigilant Pay, and is used by a very wide variety of organisations. While it was originally designed to detect fraud, detect payments, it also surfaces a lot of errors being made in payment transactions, so great tool for AP teams. Since then, we've gone on and built an anti-money laundering compliance platform for reporting entities, and we've worked closely with the New Zealand Police Financial Intelligence Unit and the DIA and developing that product. So yeah, we sort of see ourselves more now using tech to be digital crime fighters.
Excellent. And David, over to you, a brief synopsis of the Strategy Group.
Yeah, so yes, Strategy has been around for about 30 or 30 plus years now. And so we specialise in AML CFT auditing, both in New Zealand and offshore, and obviously regulatory training and regulatory compliance and auditing and reviews across the entire financial services and also real estate, accounting and legal sector. Now, we see fraud all over the place, but often it's not recognised as being fraud by those that have been subjected to it. And Sam will step us through, particularly on the payment fraud. But what we see is fraud is categorised into probably three areas. The first one would be criminal fraud, which is what most people are familiar with, like payment fraud, but it obviously also includes AML CFT, or anti-money laundering, countering financing of terrorism, and it's got slightly different terminology in different jurisdictions, but that's all of the laundering of money all around the world, and we're talking tens and tens of billions of dollars every single year that goes through that. But then the other area we see is civil fraud. And that's where we see false statements being made, false and misrepresentation of someone doing things, what we call ghostwriting, where someone who's not qualified to be a financial advisor is actually giving advice purporting to be someone else, and so on and so forth. And then the third area we see is sort of contract fraud sitting within businesses. And particularly now with technology, and I'm sure Sam will allude to this, often what we see now is online pay programs, and where the employees are expected to go on and self-report when they're taking holidays and self-report sick days and things like that. And it's phenomenal when we do a deep dive into those as part of an audit that we find just how many people aren't recording their sick days and aren't recording the holidays or the half days off that they're actually taking. So all of these factors are fraud, and it's just symptomatic of what is starting to happen around the world, and boards need to be mindful of that. Back to you, Sean.
Thanks, David. Fascinating. Okay, so we'll have the slides ready for you at the end of the session, so sit back and relax. There'll be a white paper and a presentation which will also be sent to you. So please relax, sit back and ask as many questions as you possibly can. Okay, Sam, over to you. The floor is yours.
Cool. Thanks, Sean. Okay, so let's start with talking about what I call the recipe for fraud, and the main ingredients are that all businesses have multiple payment systems that are siloed. They don't talk to each other at all, or certainly in a timely manner, and that's largely not going to change. Accounting, payroll, and banking platforms all have their specific needs. Some industries have very specific ERP systems and so on. So that's a harder problem to solve, but it means that they can't really have central oversight easily, certainly in real time. So processes can only be as good as the system's limitations, and look, all systems have limitations. So that's also a difficult problem to solve around the recipe. Not reviewing systems and procedures, particularly when things change, and we've seen a lot of change in the last couple of years, obviously, and we've got remote workforces and so on. Have systems really been documented and changed appropriately? And humans, of course, and ain't going to change human nature. We're all human. We'll always follow the least line of resistance, and we're certainly not going to replace humans, despite what people talk about AI and so on. Just back on that slide quickly, Sean. So key modes that drive this is trust, or too much of it. You should have trust. There's no doubt about that. But relying on trust alone is not a good defence to protect the business against fraud. Expectation gap, where others think others are doing without asking questions. You do need to ask questions and have systems and processes making sure they're in check and balance. Opportunity and motivation, which we're going to talk a bit more about, those are the key that really trigger payment fraud. So there's some differences with payment fraud between internal and external fraud. If we look at internal fraud, there's what we call the fraud triangle, where you have motivation, opportunity, and rationalisation. So I'd argue that opportunity always exists in organisations to some degree. Motivation is the trigger to a fraudster taking action. Interestingly, a lot of individual fraudsters in organisations have no criminal record, circumstance changing their life. They might lose income in their home. They need to look for money somewhere. They've exhausted all their avenues. That's their motivation. They already know there's weaknesses in the system. They've got access to them if they're in the accounts team, perhaps. And then, of course, once they start taking money, they rationalise why they're doing that to themselves. I deserve it. I should have got my money back. This is a constant MO that police get in investigations, if it ever gets that far. And so, external fraud, quite a different animal. Motivation is pretty much greed, and because you can, and you've got a criminal background. As professionals, and as David touched on earlier, professional crime is just it's global now. We're all part of a village digitally, and of course there's multiple events. So you've got multiple actors constantly having a go at organisations, and there's a shift from just individuals and moving into business, because businesses have much bigger amounts of money to defraud them. So motivation, greed, they exploit opportunities, but they don't know if those opportunities exist. They've just got certain techniques they use, and if you've got the weaknesses, they'll find them. And they're lazy. If they don't uncover fraud or if it's successful, then they'll move on. So the big difference between the two, from a business perspective, is internal fraud. The fraudsters are intimate with the weaknesses of the business already, but once fraud takes place, and it's discovered, which are two different things, the cultural damage to an organisation, the drain on the business, the dealing with the circumstance at all, is way more personal than just shrugging shoulders from an external fraud and going, okay, we need to tighten up our systems, but everybody gets hit by external fraud. Quite different on internal fraud, because you'll know the person. So if we sort of dive a bit deeper and look at the processes, typically all businesses, regardless of size, short of Mar and Power operations, will follow these processes internally. They will prepare a schedule of payments. It'll be either an electronic report or a printed report, and it'll list the proposed payments. So say a creditor run for the 20th of the month. One or multiple approvers will review the schedule of payment. It's largely two-dimensional, one-dimensional document. They really can't dive deeply on all the payment information in that process. We're doing this in real time in the approval process at this stage. So they really have to rely on trust. The batch file is then created. So for those that aren't so familiar, a batch file is where all the payments are prepared in the accounting system and then uploaded to the bank. And that is verbatim what the bank uses to approve payments. Then the same or other approvers will log into the bank and release that payment. So the problem with this process is several. One, nobody checks the batch file going to the bank. All sorts of things can happen after the payment schedule has been approved and before the batch file is even created. So somebody might come in late and say we've got a few more payments to squeeze in, and it may not go through the process of getting it approved. Somebody in accounts payable may just add those in and then create the batch file, upload to the bank. Some of you may have heard of a checking or hash code that the banks rely on. Well, that's fundamentally flawed because it's been around a long time, and it's simply a calculation made up of all the bank account numbers in the batch file, and it comes up with an 11-digit number. The bank does the same calculation when the batch file is imported and expects to see the same number. Well, of course it will, because if a bank number is changed, that's done in the accounting system before the batch file is generated. So it's fundamentally a pointless exercise in my view. batch files are destroyed. That's another problem. So I'm sure David, done any sort of forensic investigation, will know that when you're looking at bank statements and you've got a creditor run, you'll see the total amount, the name of the batch file. You won't be able to unpack that. And when you go looking for the batch file that was originally uploaded, the banks destroy them, the accounting systems probably don't save them. And if it's fraudulent activity and it was saved somewhere on a computer, the fraudster is probably deleted to hide their trail. So not helpful. So from an audit perspective, very, very difficult to find out what made up that payment. And it's not humanly possible for the approvers at 3 o'clock on Friday afternoon or Thursday afternoon to really do a robust check. They're relying on all the checks and balances downstream to have been done properly, understandably.
So there must be some horror stories out there, David, from your many years of dealing with organisations in terms of audits, organisations. You're happy to share one or two?
Oh, yeah. And even if we start at the small end of town with, say, a business that might only have half a dozen or a dozen employees, what we've seen there is where often it's the founder's wife or someone like that hands responsibility for the pay and the accounts across to a trusted employee. And then that trusted employee obviously gets a mortgage for his or her house. And then over time, they get into financial strife. And before you know it, that employee who's now running all of the accounts is suddenly given him or herself a pay increase, or they're paying someone else that they know to do work that doesn't exist, but they're on the payroll, or they're suddenly a contractor. And so we see these sorts of things sort of creeping through at the small end, where there hasn't been those checks and balances, simply because one person's always done it. So they've just passed it across to another person without thinking through that you need that cross-checking. And then obviously when you get into the bigger end of town, we see a lot of, not a lot, but we do uncover incorrect invoices where they've come in, they go through to, say, the CEO. The CEO is flat out in his or her role. And so they just automatically sign them off, thinking that someone else has actually looked at them. And then they go through to the accounts, and no one in the account side is actually cross-checking these invoices against the schedule of suppliers. And so they go, well, because the CEO has signed this off, it must be correct. And so they just automatically put it onto the batch, and off it goes and it gets paid. And these sorts of things are happening all the time. And it's been happening more and more, we've noticed in the last 2 years as a result of lockdowns and COVIDs, and the decentralization of a lot of the systems that used to have greater scrutiny when they were all under the one roof.
Fascinating. Nigel, any comments from you on that?
Yeah, I think the decentralisation is a really good point, and it's one of the questions that I ask, the boards that I'm at. With COVID and people not being around, you just don't have that environment where you sort of have this natural checking, and so I think your trust factor goes up, and therefore you are a little more vulnerable for what that can bring in, and that extends through to things like sick cover and who's not around and who's got the alternative authority to sign off on some of these things. If someone actually has COVID, for example, they're not even proving the batch or whatever checking stage they're at. So you've got to be mindful of those things.
And Brett, we had a discussion the other day about it from a small business perspective, and you being the CEO and co-founder.
Yeah.
Where do you see things?
Oh, look, I mean, in the early days of a startup like BoardPro, which is 7 years old now, you have high degrees of trust, but the control span is very narrow. My co-founder and I basically had eyes on, we're approving everything flowing through the business, and we knew each other for 20 years, etc. And then you wonder years later, when you're a much larger organization, 20, 30 staff, there's just much more complexity, and and you need to delegate further. Credit cards go wider. So I'm really kind of thinking here, I don't know who to put the question to. Maybe we start with you, Sam. How does the director, because I saw a lot of our respondees in the questions were board members of smaller, sub 50 staff, sub 20 staff, a lot of them not-for-profits. How does the board member, maybe this is later in the presentation, how do they build the confidence that the control systems are there?
Yeah, well, there is a slide to discuss that later on, but just touching on that now. And I'm not a professional director. I only sit on one board, so much like you. And the questions have to be asked. You need to be confident. So fraud constantly, and we took time to learn this ourselves, it is actually a governance. Fraud and protection of the business is a governance role. And so it does start with the board. So the board needs to know there's good financial health and safety. And there's a number of ways to do that. And it varies on different size of business. It's got a, if you're a small organisation versus a very large one, small companies are not going to have risk and audit committees with oversight there. So smaller organisations, the board should ask a number of questions, and we've got a slide to that later I think we can talk to.
So the answer's got to be to call the police, Sam.
Well, from my experience, call the police was very disappointing. Gosh, look,
David's shaking his head as well.
Yeah, I think it's pretty well summed up, guys, in the first one. White collar crime takes a back seat, and nobody here in the audience either is going to argue that life-threatening matters need to take a priority over, good police work on any white-collar crime. Now, when you typically, especially, and I'm talking from a small organisation, but there's a bit of a knee-jerk reaction. You're pissed off. You want to get to the bottom of it. There's a whole lot of stuff going on, particularly if it's internal. If it's external, you go and report it to some government entity like CERT, and then probably don't get a response for some time because so many people are reporting cybercrime. But that internal crime, you want to go after the police. The police will say, oh, hang on a minute, what evidence have you got? And you go, well, what evidence do you need? But the reality is you do have to have some credible evidence. And when you start looking at your case, it's not that straightforward. So you need some very clear evidence if the police are going to pursue it. And again, it's going to take a backseat regardless. So then what? Do you then go all singing, dancing, go out and get a forensic expert in? Do you do your own forensic investigation? I can tell you it's difficult because most of the transactions will be disguised. A lot of forensic experts will tell you basically double the number that you discover if you bother to find all the information. And it's very hard because it's easy to hide the tracks of. And I'm talking about frauds that typical fraud may not be discovered for 6 years. An internal fraud from a trusted employee, they can go on for some time, and even the fraudster's shocked about how much has actually been taken. So then, the who, what, and why, who's going to run it, who's going to oversee it internally. The Audit and Risk Committee is only something that's in bigger organisations. Not every organisation gets audited. I see that we've got some today from not-for-profits. And not-for-profits, unfortunately, are a big target of internal and external fraud. BWO put a lot of good reports out on not-for-profit frauds. So then you've got employee issues, particularly, obviously, it was internal. So you've got HR issues. But when Nigel and I were talking the other day, he really highlighted the damage control, not only internal and external, but internal, your cultural impact. You've got staff that say, the whispers and all has been fraud discovered, and they may not be exposed to everything that's going on. They know something's not right. Externally, you've got your shareholders, you've got your customers, you've got your suppliers. They will find out about the fraud. They will have questions. It's nothing inviting that you want about fraud. So very difficult, and specifically internal fraud. There's a lot of hooks and worms in that. So I think on the next slide.
I thought we'd just have a couple of questions that have come through. The first one is for you, Sam. It's a technical question. How do we electronically check a batch file? Is that something that software does for us?
Yeah, that's got to be software. In the 7-9 years that we've been analysing batch files with our platform, we've come across one customer who we became a customer because he was an ex-IRD auditor, and he was manually analysing in a spreadsheet all the transactions in the batch file. No, nobody does that. That's huge control, but he had the skills to do it, and he wanted a way of being able to analyse. So it's not easy to analyse batch files. It is basically a payload of a whole lot of information for the bank with commas between it, and even opening it up in a spreadsheet can wreck it. So that's why we developed software to analyse that batch file.
And this question's, I think, for David. How do we streamline control systems? We've tried to have transparent checkpoints, but I can see there is always room for improvement.
Yeah, so the first thing I'd sort of stress here is we've got to trust people, but we've got to be able to check as well. So everything there needs to be a segregation and separation of duties. Managers need to be doing their supervisory type of checks along the way. It's always good as the business grows is to have someone within the business or a team that is dedicated to compliance and risk, and that team would conduct what we call the second line of defence, and they would be checking the checkers on a sampling basis to identify what's happening. But the level and type of controls you have will be determined by the size of your business and how technologically or otherwise advanced it happens to be, and the type of employees you have within the business as well, and how they get remunerated. So every business is different. But just going back to a couple of the points that Sam made on the earlier slide, I can't stress enough that once you've identified fraud somewhere within the business, the natural reaction that we tend to see is the either the board or the CEO or the founder fires the person that they believe is responsible for the fraud. But what I always caution when people ring me up and go, look, I've identified fraud or I suspect fraud, shall I fire that person and tell the police? My first thing is don't bother with the police, it's a waste of time. And secondly, don't fire the person or do anything in too much of a hurry. What you've actually got to do is you've got to step back, recognise that, yes, there is fraud here, but how far does that go? Is it only in the area that we've identified, or is it permeating in different formats throughout the business? And that what we may have, as Sam's alluded to, is a beginning or actually an embedded culture of taking advantage of things. And before you know it, there could be different types of fraud across the whole business. So, Sam, you got some thoughts around that?
Yes, absolutely. And I was thinking that this new COVID era, we've got this disparate workforce now, and working from your kitchen table, and responsible for some cash element of the business. You haven't got somebody looking over your shoulder. You haven't got ready comms with senior management necessarily, and you're left largely to get on and do things. So that is setting up an environment where you feel more comfortable to be dishonest. And so that transparency is less now than it's ever been. And I think we're going to see a hybridized workforce going forward regardless. And the culture thing, I can certainly say in my case, the culture we had an excellent culture as a company. Staff, we had all sorts of staff activities and stuff, typical IT company, but that doesn't change the fact that individuals have their own culture out of work, and when their circumstances change, they've got access to the money, they'll take it, and it's just an easier environment. So, yeah, look, I think you've got to have more checks and balances now, given the environment we now probably are going to have for some time.
So, Nigel, go ahead.
Yeah, I was just going to add a board perspective to the question around streamlining. So one of the boards of mine, literally 3 weeks ago, as a board, we reviewed all of the payment policies and processes and things, and they were great. And then, but there's one line on this one, and it was, here we have a manual override, right? Now, as a board director, I get nervous when I see manual overrides because that just opens up potential for the sort of thing that we're talking about now. So as a director, I'm like, well, we've got this process, we've got a policy, but if you've got this sort of ability to have this manual override at a certain stage, what's the point of it? What are you trying to do? And it was down to the streamlining thing. So you can streamline things too far. And so we went back and management reviewed it and tightened it up. But if you've kind of got one-liners on that, it almost makes the rest of it redundant. If someone in the chain has the ability to go and do what they want because the policy says they can, and it's up to the board to pick that sort of thing up.
Could we get you to elaborate, Nigel? I think that's really valuable for our audience. Just the general approach you would take for those sort of sub 50 staff organisations. I know you've worked across a gambit of smaller and larger. Yep. Just what approach you take as a new board member in terms of looking at, how do you ensure that you're reasonably protected and the control systems are there? What's your approach as a board member?
Yeah, so I've got involved from a charity with literally 3 people right through early stage and high growth and the big ones as you've talked about. So I always start with the delegated authorities, and we would review those at a board level minimum once a year. And that's your authority is like who has the ability to sign off on what and to what level. And that policy should detail, the 2-step process, and is it the CFO, is it the CEO, is it senior manager, and who initiates the payment, and then who signs off on it. And you've got to review that minimum every year because one, you can get drift, and then you go, it's been 2 or 3 years since we looked at it, or management don't adhere to it because they go, the policy's out of date and that payment value is not enough anymore. And and if you let it go once, then it'll carry on. I look at things like induction for new staff and training. My whole attitude on this is more show me, don't tell me. So we've got the questions which we'll come to next, but I like to look at things like test scripts and also the results. So if we've got an internal team or even the external auditors, but they won't always sort of pick this sort of thing up. I get down to sort of that level. And it doesn't mean that I'm going in and checking batch files myself because that's not the role of a director. But you've got to do a little more, I think, than just ask the headline questions and then say, well, I asked the question and then move on.
So that takes us through to research. Sam, segue in. Yeah, so we did something that I don't know why we didn't do it earlier, but recently we did a research on the amount of batch files, and there's been thousands, billions of dollars worth of transactions processed through our platform from our user base. And we found that 8%, it was actually 9% for payroll batches, but 8% for creditor batch runs were found to be incorrect. So they were deleted and recreated in the accounting system and uploaded again for a check. So now that's certainly not fraud, and that could have been a single transaction out of 100 transactions in a batch file. But what it highlights is that organisations using all these different systems and processes are still being caught on our platform catching that there's something wrong. The accounts payable team that first see the file and it shows them there's some unusual, noteworthy transaction, it gets them thinking, oh, I've got to correct that. It might be a duplicate payment. It might be some other error or recently paid because it came in by email and came by post as well. All those sorts of problems businesses have. So certainly not all fraud by a country mile, but there are errors there. And this is where technology can really help. So 10 years ago, we sort of didn't have the adoption of cloud that we have today. And certainly with cloud technology, we can do a lot more stuff. We can aggregate data. So one of the things we do is we pull all our user bases payment data so we can cross-check against other payees. And we know that somebody's paying this bank account, we can surface that to others and say, yep, that bank account does belong to that person, and there are 5 others that also pay that. That's really valuable. You couldn't do that with a local system. So that's cloud really helping us. Maintaining and verifying a public credit list. So we can tell you that's Contact MG or Vodafone or Telstra. That's their account. And nobody's putting their bank account number against the name. And of course, storing of that historical payment data for all the users is being able to look back on that. Every time the file is uploaded, it can analyze all historic payments as well against new payments and say, hey, something's changed. And I think, and I'm no auditor, but it's one of the things that auditors look for, what's changed. So, and then automating onboarding suppliers. So onboarding suppliers is usually a pretty lumpy process in organizations. Yep, their accounting systems, ERP systems will have processes. Humans get involved, they get busy, they don't follow procedure, and suppliers aren't always onboarded. And after all, at the end of the day, the common garden variety of fraud is, changing a bank account number from both internal and external fraudsters. So, questions, and this is certainly not an exhaustive list, but it'd be interesting to get Nigel's feedback on this. But what can the board do? What questions can the board ask? One of the first ones I think is, how would we know if fraud's taking place now? Because that's upfront, in your face. How would we actually know? How would you answer that question? And what are the internal and external red flags of fraud? The fraud doesn't always have flags, obvious flags, but you need to be able to surface them if you can. Our payment process is documented and updated, exactly to Nigel's point before. Payment systems tested from a fraud perspective. Well, then again, that's that scripting. That's a great idea. And then what tools have CFO and AP teams got around being able to analyze payments, and because it's a very manual process and it's stepped from when the invoices first arrive and so on through the business. And I think a really good question is ask the payment approvers. They're the ones with their hovering with a pen to sign over every time they're signing the schedule of payments for payments to the bank. And when they're large sums of money and they're looking at that bottom right-hand corner going, that's 750,000 or 68,000, whatever it is, they're going, oh, I'm signing this off. And they're really relying on trust, because at the time they're doing that, there's no way humanly possible to check that everything's being done properly. They have to trust that the downstream processes have worked.
Nigel, any comment on that?
Yeah, I'll pick a few of these out. They're really good. Like the first one about the fraud taking place. One of the business I was involved in, which has significant flows of money, and a lot changed around that process. And part of that exercise was getting some of the staff in and going, actually, how could we break this process and actually do this? Which was actually quite an interesting exercise to do it sort of from the inside out, and and get some of those thoughts from the staff as well. Things like internal red flags and flags, changes in people's behavior. If someone's on 50,000 a year and they turn up in a Maserati, I've read about instances of this before where the person's excuse was, they won lotto something like 3 times. So you've got to look at those and go, well, is that really realistic or not? Down to the payments being tested, I like to see the test scripts and I like to see the results. I think that's really important from a board perspective. And then that last one there around, the concerns in payment approvers. And I think that starts with that delegated authority piece that should be reviewed once a year. I think it's a really important thing for a board to have oversight of.
Excellent.
Okay, so, if there are concerns or an event has taken place, so whether you've got suspicion or events taken place, as David alluded to earlier, get some external advice. Don't just sort of knee-jerk react. In fact, what I didn't mention before, but a lot of organisations, if they're not listed and have to report this stuff, they find it also hard, particularly internal fraud. They deal with it really quickly. They deal with it pretty poorly, frankly, and they'll sweep it under the carpet and move on. Probably never recover the money, and regardless of what size of the amount that's been taken, they tend to want to move through the process pretty quickly. So because of that, fraud is really underreported globally. Nobody really knows what the true numbers are because of that. So take your time, get some evidence, really look at, as David said, that there could be fraud fingering its way through the rest of the business, whether it's cultural or you may have collusion going on. So just take time and take some advice on reviewing that properly before you just act on it. And again, as I said before, internal and external fraud, the two different animals. Internal fraud, which is my experience, is littered with so many issues that you really, best defense is avoid it happening, frankly.
I'm going to ask you a question, Sam. I see that's the next slide. Though you say fraud is underreported, is there research on, what percentage of organisations will suffer fraud within a time window? Can you give a sense of what the size of the problem is so that directors have some guidance?
Yeah, look, there's the four main accounting practices have put out for years a biannual report on fraud surveys they've done themselves. There's American fraud organisations that do global ones as well. And generally, it's in the APAC area, it's 60% of businesses have experienced fraud of some nature. The average fraud that takes place is growing significantly. I think it's around about 200,000 now before it's discovered. One recent one I read is that the shift has moved from female to male on internal fraud, which was interesting. And all these are available if you look for fraud surveys by PwC, BDO. And as I touched on before, I think BDO, I was talking to them recently, they said they've stopped doing it, but they used to do a really it was a fascinating report for not-for-profits and how exposed they are and why it's important they get audited. So those reports are all online, and there's a lot of good reading and information on those as well.
And David, with your organisation Strategy, you sort of have an ambulance at the bottom of the cliff and at the top of the cliff, don't you?
Yeah.
In terms of providing guidance for organisations that may suspect they've got problems. So where do you fit into things, and what do you do for organisations?
Well, the first one is, we provide this third line of defence as far as compliance is concerned. So that enables us to check that the systems and processes and controls are actually there. And even if they're documented via a policy, that they're actually effective and actually working, because there's a big difference between having a policy document and the things actually being followed through properly. The second one is we become a sounding board when things do go wrong from that sort of perspective. The third one is, when it comes to AML CFT, we do those statutory audits that enable boards to have peace of mind around whether they are actually meeting their legal liabilities. But like Sam indicated that there's 60% of firms report fraud, I hazarded a guess it could be a bit higher than that. And the reason why it's only deemed to be 60 is because people have a different definition, or there's different definitions of what fraud is. And if you think wider about dishonesty, then in many cases, most businesses will have some degree of fraud. And a common one that we're starting to see is more and more businesses in today's regime are using contractors to do work. And the contractors invoice based on their timesheets. And it's incredibly easy to falsify timesheets and put down more time than what you've actually spent on a job. So that's misrepresentation, that's falsification. And once again, if the controls aren't there at the direct management level to pick up that the timesheets aren't right, then that goes all the way through the process. And then the payment is made and no one's the wiser. So technology is great, but technology also can, in many instances, facilitate the expansion of fraud, because those checks that we used to have by sitting in the office side by side each other are no longer there.
Excellent. Okay, so that almost concludes our webinar today, everybody. Feel free to connect with our presenters today. I'm sure they'll look forward to your connection on LinkedIn. Now, we have a really amazing schedule of webinars over the next few months, and you can learn all about these topics. You can go to our website, which is boardpro.com/webinars. Our next webinar is titled How to Conduct Board Evaluations, which will be really interesting. So please take a moment to consider an investment in time in that particular webinar. And finally, you'll receive, as I promised in my opening, you'll receive an email from us very shortly, which will include a video of today's webinar, the presentation slides, and our topic white paper from Sam at Vigilant Pay. We also will post this collateral to our webpage over the next few days. Now, just as you leave the webinar today, don't forget to complete our 1-minute survey to go in the draw for that great hamper. We'll announce the winner just shortly after the webinar. So thanks everybody for your attendance today. I hope you enjoyed the session with us. Thanks again, Sam, David, Nigel, and Brett. It was great to have you all with us.